Hey guys, there is something interesting that I want to share with you today. Let's look at this market. You can see the structure or the pattern of this market. It seems like it has been moving in a range, because you can see with these three confirmations on our support level, we can see that it was touched here, it was touched for the second time, and then we have the third touch. So a lot of retail traders will look at this and start looking for buying opportunities all the way on this support level here, which is really something a little bit dangerous, because before you can execute any kind of a trade, or before you can open a position, it is very, very important to make sure that you consider every aspect of the price. It is to make sure that you analyze everything. Don't just rush to execute a trade and say, okay, I'm gonna buy here hoping that the price is gonna move up. It is important. That way I always emphasize that even when you're analyzing a range, it is important to look at how the range behaves, the behavior of the range. For an example, in this case, this market or this kind of a behavior doesn't qualify this market as a good market to be bought. Why? Because as you can observe how the trend was the range was behaving, we can start from that main high all the way there. But when you come to the range, you can start considering this one, and then that one, and then the next one. So you can see that on the resistance side of the range, we can see that it's not some kind of a horizontal move. It's some kind of a diagonal move or a downward move, which resembles the strength of the sellers, meaning in this kind of a range, although we have lows which are at the same level, but if we can come to analyze the strength, because the highs are not at the same level, it means that the sellers, they are a little bit better than the buyers. Why? Because obviously the sellers, they keep on pressing on the buyers more and more, meaning the buyers, they are not able to push higher than these kind of previous highs, meaning they are failing to beat their previous records. Although the sellers, they are also not able to beat their previous record of low. However, to them, it is not that they are giving higher lows, but it's more like a draw on the downside. It's more like they're just on 0%. They are not on a negative or on a positive percentage in terms of their lows. It's like they're just zero, meaning they are reversing where they reversed last time. They are not reversing a little bit higher. They are not reversing a little bit lower. Meaning if they're reversing a little bit lower, it means that it was going to be a clear downtrend. But on the upper side, because the buyers, they are more like reversing on the negative side, it means that they are weaker than the sellers. So that's how we should look at it. Don't just pay attention on only one side of the picture. Other people can only pay attention to the lows that, oh, this is a support level. It means that I should execute my buy. This was my first touch, second touch, and then that means that it's my buy on the third touch. You shouldn't look at it on that kind of view. Make sure that you gather every information that you can in terms of the range. Make sure that you analyze even what is happening on the resistance side. Just to show you what happened next, let me just allow the market to play. Let it go a little bit faster. So there we are. You can see what happened next. The market just immediately broke to the downside, meaning the sellers, they immediately proved to us that they are indeed strong. They just proved to us that they can do better than the buyers. Why? This wasn't a surprise. A lot of traders can say, no, I tried to buy here and then the market broke out and smashed my stop loss somewhere here. It's not a surprise. If you are an analyst, this isn't a surprise, because by analyzing here these highs, by observing the strength, you can expect a breakout on the downside by observing how the range was behaving. So it doesn't mean that every range, the favors are equal, or the possibilities are equal. In this case, the possibilities were not equal. Why? Because the sellers, they were performing better than the buyers by pressing further down and down as the market was proceeding. So it's very, very important, guys, to pay attention into such scenarios. Make sure that you don't just see a range only from one side of the picture. Always analyze every side so that you will get the whole picture of what the market is doing. I hope this is making sense. So this is gonna save you from fake breakouts. This is gonna save you also from other distresses that the market can impose onto you. So let me just leave it here. Thank you guys for watching. Remember to like, share, and subscribe.